Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that we had responsive buyers active near yesterday's low, around 76, 77, and got to move up to the 84 to 86 overnight resistance, where responsive sellers were active on first test. But overall, in the overnight session, buyers are more in control, and that's why we got very minor rotations off that 84 to 86 resistance. And at this point, heading into the session, if we can hold above 79.5 to 81.5, we can pretty much be set for a move to 88 to 90. That's really the main inflection point at this point on the upside. And if we can break through 88 to 90, then the market would be set for a test of the 96 to 98. The main economic catalyst this morning is the Philly Fed survey at 9 a.m. Central, so we could get some rotational moves ahead of that. But keep an eye on pre-market support, 79.5 to 81.5. Holding above that zone tells us that buyers in the short term are in control. And bigger picture, we already know the context is quite bullish, so that would support the long side. In the event of a break below pre-market support, the next inflection point is initial support at 76 to 78. And, at this point, ideally, if we have enough buyer strength, which it seems like we do, looking at NQ and TF and how well TF held up overnight, it seems like we are set for a move to 88 to 90. And if that's the case, then ideally we hold above pre-market support. Now, if we poke below it, and test initial support, it doesn't mean that we can't head higher, but the ideal situation would be that we don't even come down to 76 to 78, that we actually hold 79.5 to 81.5 and then head up to 88 to 90. Now at 88 to 90, on first test we can still get a sell response. It's an important inflection point, but in the event that the market just pushes through that zone, then you don't want to be shorting the market anymore, right? At that point, the next spot to consider a short is 96 to 98. So that also means that you want to be on board for the upside. So 88 to 90, if the market is looking more or less balanced and, the internals are not big initiative to the upside, we can try a short. But if the response at 88 to 90 is just a minor rotation, kind of like the one that we're getting right now at that 84 to 86 zone, then it's very likely that we could just balance a bit and then break above 88 to 90 and make a directional push to 96 to 98. So that scenario is on the table. Now, in the event of a downside move, right off the open or after the Philly Fed survey, in the event of a downside move and a break below 74.5, so break below yesterday's low, we can still look for buyers at the next zone, right? The bigger picture context remains bullish, and in the event that we do get a break below yesterday's low, it's very high odds that buyers would step in at the next support area and then make a push back up towards the 76 to 78 at the very minimum, and probably back up towards 85 to 86. So, we can get a pretty good buy response off of any test of the lower support zones. That is the lower odds scenario. So, I'm not expecting a break of yesterday's low. Ideally, the downside move yesterday was a downside exhaustion move. We got a spike on the downside in the tick. We saw like a minus 1340 tick reading on the downside. So ideally, that indicates short-term exhaustion, and now we're done. But sometimes what happens is we get short-term exhaustion followed by a very minor new low, and then a big move the other way, right? A big move to the upside. So it's kind of like, when we discuss on the 1-minute chart how, when you get a tick extreme, usually you want to wait for price to go a bit lower before it reverses. A similar concept would be in play in the event that we broke below 74.5 today. Basically, we would have the tick extreme yesterday, followed by a new price low today, followed by a reversal to the upside. So in any scenario, really, I think it makes sense to be more active on the long side for now. So unless we see some clear signs intraday that the market is selling off, I think that looking at the overall context, looking at where we are within the trading range, it still makes more sense to be more aggressive on the long side rather than the short side. And any pullbacks into support are still very good long setups. And in the event that we do break 74.5, I would expect buyers to step in at the next zone or maybe even ahead of it and push it back up into the balance that we're establishing now at basically the 75 to 1800 area. So I don't expect that range to get rejected outright based on one day of selling, right? So at this point, the upside objective is 88 to 90. That's the high odds area that can get tested. But the way this whole thing is set up right now, that zone does not have to shut off the buying. It can result in rejection. The potential is there, but at the same time, if market pushes through it, then we're probably going up to 96 to 98, or at the very minimum, 93.75 to 94 quarter. So we're judging the strength of the market based on the reaction of every zone. That's the way that we're viewing the market, and it gives us a lot of clues and market tells ahead of time to get an idea on where we are contextually. So right now, if we hold above 81.5, we know that the market's pretty strong. In the event that we break below, we know there's a little bit of weakness, but 76 to 78 can still work. On the upside, 88 to 90, perhaps get a rotational type move. But if it starts balancing a bit and you're not sure which way it's going to break, I would by default give more edge to the buy side rather than the sell side right now. So let's see how we react off the open. We do have a gap at 79.75, which can also get filled pretty quickly off the open. And other than that, the main target on the upside, 88 to 90. Above that, we have the zones above, and we'll focus more on the long side if we do get a break above. And 88 to 90 is an area where we can try a short first test. So let's see how we react off the open. Philly Fed at 9, and we'll take it from there.